good morning, everybody. Today is Thursday, is September 9, 7:58 a.m. Eastern Time. First thing that I want to highlight is our close group, especially a spread that printed for Friday, if I'm not wrong, is this one. Let me open. So a 4,445 put, 4,445 call, right? A spread. I highlighted this order because look what I wrote to you guys. Even think or swim. How can I say? Print as sold a put and bought a call because came like red put and green call. I told you guys that doesn't make any sense, and you guys know that every uh, order tool, think or swim or internet broker, in every exchange tool or every tool that people develop like Shadow Flow, no Joelhos, they have bug regarding those orders because it's almost impossible to know every single order. And because that I explained to you guys, that's important to understand options, structures, to you put intelligent in raw data. Because basically what those tools provide to us is raw data, right? It's raw data. And then I wrote to you guys, as a human being, doesn't make sense to me to buy a call and sell a put, since nowadays the call contracts is still expensive compared with the put, right? We are very close from the all-time high with lower volatility, higher value in some call and put contract strikes. So in theory, it's much easier to burn call deltas than put deltas. First of all, we already break down 4,500. I explain you guys different as those furus, CTAs, 100 million follows that only talk bullshit because they look for customers, right? So they send message what customers is wanna listen. Because I worked in a bank before. I told you guys, don't trust in Twitter. Don't trust in those fools. Don't trust in Jim Cramer because they are paid, to big companies, big players, dealers, find the liquidity or to buy or to sell, whatever, right? I explain you guys that you will see a spike in volatility as soon as you break down 4,500. Right? And I post in the open group the crash. I'm not calling a crash, but a weakness period already open, September and October. Why? Because the major assets that has inverse correlation with risk assets like yields, like the XY dollar, right? The dollar index. And because that, I told you guys, be careful playing longs right now. Because the cost of borrow nowadays is skyrocket. Means liquidity have been drained from the economy. And the badge book published yesterday, the Federal Reserve just sent a message that what I have been telling you guys, a credit crunch crisis. He said, yeah, the average family is already use debt, is already borrow money to survive. They put this very clear in the badge book yesterday, right? So back to the spread, doesn't make sense to me. For me, it's not profitable to sell a put to buy a call because the put is still cheaper, right? especially to build a structure like that. So as soon as I put this, you guys saw a melt up, right? You guys saw a melt up and a rejection at EMA20 at 4,465. I also post here, some other orders that we need to look for some levels, especially 4,454 was a minus 0.88 delta that also printed yesterday at 156, also for Friday. You guys saw a melt up after those orders, print, right? Consequently, caused doubt, regarding what dealers are looking for. A melt up, a melt down. Because as soon they print, the markets went up, right? Without any gamma squeeze order in the book. I told you guys, be careful with longs because it's not printing any order that could, make me interpret that they start to squeeze, later bears. Only one order that pretty was small that I tried to copy and paste. I explain you guys. Somebody took profit, somebody doesn't. But no at least nobody lose money, right? That was the spread 4,480, 4,409 call spread. Right? I also see you guys buy hedge because we could not be paid. And as soon as it started going up, I did my math using the option books. I said, guys, we will not be paid, right? I put over here at 218. And consequently, I bought a hedge because it looks like that we will not be paid. Like 10 minutes after we open the spread. And then I close. Steve, for example, he closed with profit. Okay, I didn't. I lost $25. $25. Everybody knows that how I open structures. I always know how much I can lose. I'm willing to lose the money, right? But anyway, you guys understand about the spread and you guys understand about 4,454.4 also as a first level of support. And 45 is a major support. And confirmation of a reverse. Let's review the market structure for today. So we didn't see any, first thing that we need to highlight, we didn't see any divergence between net delta between index, Nasdaq and SPX, but I also highlighted over here that's supposed to be like a false and positive because when market bottom, we saw a lot of puts being sold, right? Means that dealers start to take profit from their swing trade. And consequently, this could melt up, not melt up, create like a false positive net delta graph, right? The delta levels that you need to look for, so the major resistance that the delta is showing us is the EMA 20 daily graph region at 4,465, 4,469. I highlight over here. Weakness below 4,463 is strength above 69. That's the important thing, the important level that you guys need to look for during the intraday, right? But so far, deltas are telling us that we have a major resistance starting 65, going up to 69. Okay, I highlighted, the option book. 4,500 nowadays is the magneto, is where, the option is trying to bring market at, right? 4,500 is still the major, the major gamma resistance. Also, as soon as you break, we will see volatility VIX is coming down. Consequently, force the market, especially who is negative delta, who has a negative delta portfolio, to buy and bring market up again. Okay, so 4,500 is the major resistance. 4,500 is now is the magneto. Okay? I explain you guys regarding the levels per option books. Regarding the orders that you saw, I already review the closed group WhatsApp chat. The first level of support 4,554.65 is because was like almost a $500,000 order. Strike 4,500 basically in the money, right? So 54.65 is the break even. We need to look for 54.65 as the first resistance, right? Sorry, support. And the major resistance is regarding a $3.4 million put premium in the money, delta minus 1, that print at 10:35 a.m. and the break even is 4,469.81 that match with the delta levels as also a major resistance, first level of resistance. Regarding graphic pattern, I explain you guys that wasn't bullish the close yeses because you have a pivot over here formed the last month. It's a 100 points pivot. So 4,470 in the future was acting as a support. Now is acting as a resistance. We have a 100 points pivot. Other thing that you need to highlight is the bullish band. In the daily graph, before, as you can see over here, the top line of the bullish band was point south, giving, margin to markets going up. Now you guys can realize after, this 2 days drop, the bullish band in the daily graph is start to be really squeezed. And top line is points south and bottom line is point north. Very squeezed. In the weekly graph, I don't have any comments. It's really squeezed. Means bullish band is telling us that a huge movement is being formed. Tend to be to the downside, right? Especially we break down 4,500. Now we have volatility and market is totally clean. We have only minus 657.9 in gamma exposure, negative gamma exposure. You guys also have realized, I have been showing you guys during the intraday, retail keeping buying calls. Dealers are hedged, not retail. Retail is a win. Also, JP Morgan and Goldman Sachs came to the public and said, we have like a divergence because the allocation is above the average in risk assets, right? Hope you guys understand that. And the last thing that I also highlighted in the market structure is 4,545 put strike. Huge volume at the close. Start to print and match what I told you guys over here in the closed group regarding the spread. Doesn't make sense to sell the put and buy the call because call is still paying more premium. So we have more deltas to be burned in the call sides and less delta to be burned in the put sides. So it doesn't make sense to sell the call. Makes sense to sell the call, make money, and finance yourself to hedge yourself. Mathematically is much better. I'm not telling that I'm correct. I could be totally wrong because this is a dealer. It's a big dealer and they know how the movement will be. Because, they have money power to move the market. Okay? So, I highlighted, the big volume at the close. So, in the summary, I put out the levels, right? So, we don't need to review all the levels. You guys already have the documents. And the last thing that I want to highlight is the GX and the GX. You guys have been observed since we melt up, after we melt up, right? Dealers is not more providing liquidity. The DX dropped to 45, so we bought them. Then jump to 49, market skyrockets, 160 points, right? 160, almost 200 points. And then, after we reach 4,540, you guys saw the drop in the DX, and the DX now is stable at 48%. Is a bullish level, okay? Bearish levels before 45. But, is something that I need to highlight is they are not more adding liquidity. So the DX now is stable, but the GX have been dropping. It start to drop again. You guys also saw that when we bought at 4,330, the dealers, bring the GX to a negative territory. Means as price acceleration, move market is easy. No money is needed. So what we saw, markets went up. Then, as soon as market went up and back test 4,540, the GX start to jump over to almost 4 billions, and now they start to accelerate market again, because for example, from yesterday up to today, the GX dropped 1 billion, so they start to accelerate market, but they are not adding liquidity. The DIX is not in jumping. So probably we will see soon a lower GX, a lower DIX, maybe below 45%, and a lower GX. So market you'll be really ready to dump. Okay? And consequently, volatility also will jump. Dump, jump. Okay? Guys, I finish here. Today we have important economic data that's supposed to be printed soon in 15 minutes. I put the economic agenda for today in the group. So in 15 minutes you have continued jobless claim. That's really important, especially important for the dollars, yields, and risk assets. Depending how it's coming, we could see DXY, and TNX jump and risk assets going down, and vice versa. We have some of FONCs speaking today, some Fed president is speaking today, and we have the balance sheet after the close. Guys, take care.